Hello, Jim here. April's been a rough month in the markets, and several really good names have been beaten down. Today, I want to share with you two of those that I think are really good additions to any portfolio. They are very profitable and they have really good options volume. So stay tuned. I think you're really going to enjoy what I share with you. I'm going to jump right in. I typically will go a little bit into what's going on with the market. I don't really have much to add from last Thursday. We're still trending down. I don't think that's going to change. We may have a rough week this week as well as what we had going on last week. The chip makers really have been nailed. I know that the video was down, I believe, over 10% on Friday. So I wouldn't be surprised if that continues. We're not really in true correction territory. I think overall the market's down about 5%, but there are particular names that are really beaten down. So the first company I wanted to talk about is Oracle, and it's currently at 114.88 there, which I feel like is a good price. It's come down quite a bit. You can see it was, what was it, almost 130 recently, and now it's all the way down to 114. I think $110 for Oracle would be a really good price. You can see here it's kind of its long-term average is right around that price. They have PE is just shy of 21, 20.56. The earnings per share is really good. If we look at their ratings, they have good ratings. Looks like Quant is hold. So I do believe they adjusted some earnings recently. So that's probably why Quant's down a little bit. But a good buy rating from both Wall Street and the different SA or Seeking Alpha analysts. Earnings, I think, also look good. Not great compared to some other companies. Of course, Oracle pays a dividend. They've been around a long time, so they don't grow. They're such a large company currently. So the fact that they're potentially going to grow pretty close to 10% on average this year is quite good. Again, they do pay a dividend, not a big dividend, but 1.39, but they are increasing it pretty substantially. On average, they've increased it almost 15% on a yearly average, which is quite good. Growth, again, the growth is kind of petered out a bit when being such a big company. They just don't grow that quickly. Profitability, unbelievable profitability. You look at their return on common equity, almost 600%, which I don't know why that's so high. It could be some kind of a weird adjustment, but return on capital is also really good compared to the industry. And so is return on total assets. Again, much higher than the sector that they're in. And then if you look at their options premium, they typically have good options volume. We'll go out to June 21st, and you can see they have good volume, and especially if you get to that 110 range, you get quite a bit of premium. So it would work out quite well to sell some vertical put credit spreads. At this time, I typically will also do cash secured puts, but being that the market is going through a tough time, I'm suggesting everyone do vertical put credit spreads if you're able to do it, at least to protect yourself on the downside. If you can't do that in your account, then definitely only look at companies you're willing to buy at the particular strike price. I mean, if we have another 10% correction, I mean, we go down another 10% from here, a lot of these stocks will be assigned to you, especially, if you're selling cash secured puts or vertical put credit spread, they will be assigned to you. So if you can purchase the put, I think it's a good idea to do it during this time period. Once we get past this and we're kind of on the rebound and maybe they're getting closer to cutting rates, then you can go back to cash secured puts. But for now, I probably won't do any more cash secured puts. And I'm actually in the process of switching over. Like, I have a couple Tesla cash secured puts that I'm going to convert into vertical put credit spreads. And I encourage you to also do that, purchase some puts that will protect you. With a company like Tesla, they've been kind of going through a really rough period. I believe they're down 40% for the year, and there's people projecting that they may even go lower. But Oracle, again, in my mind, is a different story. I have not sold any vertical put credit spreads on Oracle, but I probably would look at it. Here you can see Schwab gives them a good rating. And again, you can see long term, they're not priced crazy, especially if you can get closer, to 110 or 100. Just good numbers. They do have a bit more debt than I like. Let's look at their dividends in a little more detail. And you can see they're really increasing them at a big clip, and they have plenty of cash to pay for it. So their dividend coverage ratio is quite good. They have plenty of cash to cover the dividends. So they're probably going to continue to increase them every year. I don't think they've been doing them. Well, they've been doing it since 2014. So you can see back on 2014, it was 48 cents a share. And then this year, it looks like it's going to be probably pretty close to almost $2 a share. So again, dividends can make a big difference long term. They can really, add a little bit more bang to your returns. So definitely Oracle is one company I'm going to look at. And if I can pick up, maybe I'll do something like a 105, sell a 105 short and then purchase a 95. That's a good, almost $1.50 for a $10 spread, which typically I like. I like to get around $300 per, for two contracts. So it'd be $150 for each contract, so something I definitely would look at. Now, the second company I want to talk about is Logitech, and I did do a trade on them, I believe, last week, and I'll share that trade at the very end. But again, another company, they've been on my watch list for many years, so they've come down a bit. I really like them at this $70 range, if you can pick them up at 70. If you look at their earnings, and they've been around a long time too, so their earnings look good, not fantastic, but definitely good, and they typically beat their earnings by quite a bit. If we look at their profitability, they're also very profitable. They've got a return on common equity of 21.85, much better than the sector or their industry. And they also have good return on capital. They have good margins. So overall, just a very good company to look at. Growth, they've definitely have slowed with growth, and they do pay dividends. So I believe they pay dividends, yeah. So they have one coming up. It looks like it's about 1.5%, and they're also increasing them at a big clip. What I really like about them is let's go and look at Logitech real quick. Again, just like Oracle, they have plenty of cash for dividends. What really surprises me, they're a lot like some of the other companies I like that have no debt. So if you come down here and you look at their debt, they have no debt. So they have no debt, plus they're paying an okay dividend, but they're growing that dividend quite rapidly. Let's go back and look at their options. And again, we'll go out to June 21st, which is one of the expirations I like at this time. And again, if I could pick it up at 70, looks like it's bringing in around $1.50. And if I did 70.65, that's almost $1 for a $5 spread, which is really good. Now, if I do 70.60, actually, it looks like the 62.50 is a little better. So in this instance, I would probably look at selling a 70 and buying the 62.50, which would net me about $1.20. But I might do a limit call and see if I can get that closer to $1.50. Again, trying to earn $300 for two contracts. Again, I like them at $70. They just overall, this is another area I forget to share with people. So here you can see their earnings. They've beaten earnings all year. And then down below, this is on Schwab's research page. They'll typically list, 4 other companies that are very similar to them. And then you can actually, in using this page, sometimes find some really good companies like NetApp is another one that I've invested in before and actually have written some puts on them too, or vertical put credit spreads. So again, using this area of the peers and ratios comparison has worked out pretty nicely too. And you can also do that by profitability just to see how they compare. So if you're also looking for maybe a third company, you might also want to look at this NetApp. Now, if let's actually bring up, I believe it was 414. And here's Logitech. So this is the Logitech that I did. I did it on the 15th, which I believe was Tuesday. And I did this in my Fidelity IRA. It was a vertical put credit spread. I did 75.65, a 24 delta. At the time, it was $81, so it's come down even more. So it would be probably even more profitable to do a trade now on them. But I brought in, again, $243.30, which is a really good return because this one is expiring May 17th. So I did it for a little bit more than 30 days. So I just wanted to share that. I could go over some of my other trades that I made this past week, but I'll probably do that in a later video. I just wanted to show you what that looked like. DocuSign's also another good one that you could look at as well. But these are some of the companies that I'm looking at that I'm continuing to write vertical put credit spreads. I'm not really stopping while the market's in this correction. We could continue to go down, and I'm just finding more and more names like the two I just shared with you that are really good opportunities to sell puts on and to own, to have in your portfolio. While we're going through this correction, I can't reiterate enough, again, purchase puts to protect you on the downside. And then also be sure you're buying companies that you really want to own. So if they are assigned to you, it's not a big deal because you wanted to own them to begin with. It's less of a time for taking huge risks and putting yourself at risk, for major losses. To me, this is more about investing than it is, getting rich quick or something along those lines. I want to own these companies. I want to add them to my portfolio. So just wanted to do a quick, shorter video and share a couple companies, that I found recently. So as always, please add some comments if you're, don't agree with me about these two companies. Or if you have another company you want to suggest, please leave a comment below. And as always, if you want to learn more about my memberships, we have a group meeting tonight where I've got several, I probably will have 12, 13 people in the group meeting. So you can learn more about my memberships. I have 3 different levels. The two higher levels include the group meeting. The lowest level, or all the levels, you get my trades, you get my spreadsheets, you get to interact with me or communicate with me. So maybe worth your while. I encourage you to take a look. So as always, thank you, and I look forward to seeing you next time.